GKFX Prime presents the Market Analysis Webinar.
Hello everybody and welcome to another edition of the weekly webinar, where we saw a surprise bout of euro strength at the end of last week, a massive bullish engulfing candlestick on the weekly candlestick for the euro dollar chart. You can see in the top left corner there. This is something I'll talk about a bit more in a minute, but basically the euro had dropped after the Fed meeting, but then the euro rallied straight back again, and more so after the ECB meeting. Now, the euro rallied more than the British pound did after the Bank of England meeting, because people sort of expected a second rate hike from the Bank of England, which is what happened. But the hawkish pivot from the ECB towards opening the door to a rate hike in 2022 this year was a bit more uncertain, and so got a bit more of a surprise factor. And so now the euro looking well set as we head into the new week. So the question is, does this dollar weakness continue, or was it just a flash in the pan? Still very volatile in stock markets. We're pushing into the lows. I've added the DAX chart in because there's a big level in the DAX, which I think is important to watch. And it was a generally slightly better week for gold, but it didn't end up retracing any of all of that decline the previous week. And an oil again pushing up into new highs, new 7-year highs in oil, and WTI now over the 90 level, but touching the top of a wedge pattern, which I'd highlighted I think last week, and I'll touch it on again this week as a potential indication of a top. All right, so let's get into it. Any questions, please drop a comment in the video. Otherwise, please just look at the bottom of the screen there, tap that like button with a thumbs up button there, and that really helps us spread the word about these videos. So looking at the weekly chart on the euro, you can see pretty clear downtrend, right? You can see the fractals still making lower lows and still making technically lower highs. And then this is the big bullish engulfing candlestick on the weekly chart, which is obviously perfectly challenged this previous fractal high on the weekly chart. So what we're dealing with here is a false breakout potentially to new lows. You know, we did close lower, but then we just zoomed straight back and almost popped out the other side of this whole weekly high to low area. But we challenged the highs, and so now the question is, can we actually break through those highs? It looks like we can. And a logical thing here would be to come back and tap the former resistance area, tap it and go. But obviously last time when we pushed up above it, we ended up just smashing back down through it. And it could be that we're in just a wider trading range now, and that those highs doesn't matter, and that we're just going to kind of whip back and forth in a wide range. That's entirely possible. But we're potentially looking for a break higher in the euro and a new uptrend in the euro. I suspect there could be some retracement first, because this is far from a done deal. People will be selling at the highs, and that already seems to be happening at the start of the new week. And so if there is some sell down, but you do think the trend is reversing, obviously that provides a better entry point. So down to our daily chart here, and you can see we put in a little evening star candle here, a little bit of a kind of spinning top, sign of uncertainty at the old high, obviously. So this would be the first possible stop. You know, we could maybe have a drop down to these former highs and then look for a bounce from there. Or if we pull down to the 4-hourly chart, what I'm also looking at is if we can't hold on to 1370, which is those old range highs, then what we potentially could do is drop down towards this intermediate high on the 4-hour chart. So you can see this is where the euro really accelerated. This was the early reaction to the ECB, and then fired up once that hawkish commentary came through. So this is when the dynamics of the euro really took off. And maybe we just fade back down, and those who are buying back at those levels can add some more to their positions, or those who missed out at the start of the ECB meeting could pick some up. So potentially just the old range top could be support, or this previous thing here, and that technically could be anywhere in between these, in between these two, from the low up to the high here. Somewhere in here, potentially, if we go through the range top, somewhere in there could be where people start to kind of buy into a possible trend break in the euro again. If we drop down through there, then I think we have to probably change our optimism about a new uptrend in the euro and revert back to the idea that maybe it's just going to be a choppy sideways range, as I've talked about, something more like just going back and forth, maybe even renewing the downtrend. So at the moment, looking at this bullish engulfing candlestick, thinking maybe there could be some retracements either to the top of the range or down to one of these into this zone here that I drew on the 4-hour chart to get a better entry point rather than trying to buy at the high. Obviously, we may not even get down that low. You can see on the kind of weekly basis, if we just came back to those old weekly closing levels, it'd be much higher. But you have to. This is part of trading, right? Is you have to that trade-off between the good entry and the guaranteed entry. Entering straight away, you definitely get in the trade. But you might not have the best risk to reward ratio on the end result. So I tend to favour waiting for the better price level and potentially missing the trade. Okay, let's move on to the British pound. We're on a weekly chart here and you can see a falling wedge pattern. And so this was the last week, which pretty much came inside the previous week. So, not a lot of kind of directional bias there, but it did come off this form of resistance, did work. That was the previous week's low and that held. So if we drop down to our daily chart, we can see here that we rallied up and we've basically retraced, and now we're kind of rallying up again, and then we've just come into this little supply area here where we put in a down day on Friday. But overall, we're obviously below the 200-day moving average, but we're above the 50. So it's a little bit of no man's land, but you could probably say that the bias is slightly to the upside. Also bearing in mind that the euro put in that big engulfing week, so normally the cable would move roughly in line with the euro. Not always, but they're both trading against the dollar. So this is the key level. If we break down through this old resistance, turn support, if we drop down through there, then it seems like probably we will challenge the lows and even break lower. But I think the assumption should be that actually we hold above the 50-day moving average, and we actually start to kind of trend up and back over the 200-day moving average. That seems to be the if we view this as the rally, this is the retracement, and I think that was something like not too bad, pretty much a 61.8% Fibbo. Rallied up, pulled back 61.8% Fibonacci, back to the old resistance, turned into support, and we've rallied up. Now we did have 1, 2, 3, 4, 5 daily gains in a row, so you can't go up forever. We've had a bit of a down day. That's to be expected. So maybe even resume the uptrend as of today, or maybe a slight consolidation, maybe a further dip before picking up steam again. So it seems like the uptrend that was in place here is trying to make it's trying to gain ground again, but it's a bit of a sideways market. To get above the 200-day moving average would obviously clarify the overall trend a bit better. It's a bit of a kind of sideways market. We can see overall from the weekly, it does seem like, a falling wedge pattern normally should break to the top side, and so that's kind of what we're expecting for the time being. As I say, a break back down through this neckline probably comes back down to the lows here and possibly lower. Okay, moving on to a dollar yen. This it's a bit clearer from this weekly chart. You can see we've got a rising trend line through the highs, and I mentioned that over the last few weeks, and obviously we've pulled back from there for 2 weeks, and then we put in this bullish engulfing. Then last week we pulled back into the bullish engulfing and then closed where we began. So this is a slightly strange looking candle, but actually quite bullish, because we tried to sell off, but then we came back down to the previous the week before's low. You can see that that's kind of roughly 2/3 or so of that candle length. We pulled back and came back. So to me, the trend is bullish, and I would be, I'm expecting some sort of move through this area of resistance here, which you can see it's basically this. If you say it's this one, but we just didn't quite make it that time. We hit the top of the pattern, pulled back. Now we've held on to the low, and now we're coming back to it again, and we've held on to the 50-day moving average, and the trend is kind of picking up pace again after this little sharp sell-off here. Now, obviously, we could see some big drop back from this rising trend, but at the moment, everything's aligned in terms of an uptrend, so no particular reason to try and call a top, I think, just yet. All right, let's have a look at gold. So gold's in this underneath this declining trend line, and also got a rising trend line through the lows. Last week, I was getting a bit bearish on gold, and still a bit worried about it because we had this big bearish engulfing week off the top trend line, and it did look like maybe we had a big bearish week, 2 small moves up, another big bearish, and we keep selling off from this zone. Maybe we are just absorbing the sellers for an eventual break higher. It's encouraging that we held on to these lows through here. It was a big boom for the dollar after the Fed. The euro made new, multi-year lows, but actually the gold held on to these lows. So maybe this is the nature of a sideways market. You kind of flip back and forth between bullish and bearish attitudes towards it, depending on how the previous week closed. This tends to be what happens because it's just not clear which way this market will flip. If the euro moves higher and the dollar moves lower, you would think that gold should move to the upside, but it depends what's driving that move in the dollar. So ultimately, we have this floor through here, which we've mentioned multiple times, 1750. If that gives way, then I think all bets are off in gold. And I mentioned last week that we've got this parallel channel through this flash crash low, and there, so if we give up 1750, we could pretty quickly be on our way down to under 1600. But as I say, that isn't necessarily the case right now. So at the moment, gold building its case for a move potentially above the rising trend line. At the moment, it's just directionless. This is the point. So if you are a range trader trading between resistance and support, then actually it's not too bad. Right, let's move on to the silver market. Similar situation, obviously. This is our long-term chart. 22 is the major support. We've got a declining trend line through the peaks here. We have that big bearish move lower, and it's just the same sort of thing. We've got this interim area of support, which this is why a weekly chart's good, because it's very clean. You can see that's where the kind of weekly closes and some of the weekly lows have all been in this 2220-ish sort of area. So now we're picking up a little bit of steam off the area, but you can see the overall market action is pretty choppy. We kind of have a big sell-off below the 50-day moving average, then a big rally above the 50-day moving average. Then a drop below it, not too far below it, but you can see this is kind of this is the nature of what's happening. There is no trend at the moment. We're just bursting back and above the 50-day moving average. It was good confluence of resistance last time from the top of the range, the trend line, and also the 200 DMA. So you could see why sellers really joined in. But it's maybe encouraging that actually 2210 to 20 held quite well, and now we're pushing up again. So potentially, if you are looking for some justification for a change in trend, you can look on the 4-hour chart here. And you can see, so basically our logic is right that we've held on to we've held on to this significant area around 2210 to 20, as we said. This same one that we can see here on the weekly chart, and then we're drilling down to the trading time frame, and we see a potential with just a sideways pattern here at the low. So if we break above this, even on an intraday basis, back above 22.80-ish, 23s up here for extra confirmation. If we get a close above there, then it would suggest that we've put in a bottom and potentially a move back up towards the declining trend line again. So maybe a base happening in gold here, looking for a push to the top side. Oil, let me just start with the weekly chart. Here's our rising wedge pattern, potentially very bearish. Bearing in mind, I mean, even just back in November of 2020, we were down at $36 a barrel. Now we've almost tripled up to 90. And that's in, whatever that is, 15 months, right? 14-ish. So it's a massive move up in oil. Everyone's pretty bullish right now, and for trend following, it's good to follow the crowd, but eventually, obviously, sentiment gets too bullish, and that actually means that probably we're on the cusp of a downtrend. We've had 1, 2, 3, 4, 5, 6, 7 weeks in a row in oil, and we had 1, 2, 3, 4, 5, 6, 7 exactly here before the last big sell-off. These ones don't look like there were as many. That was actually 6 on that occasion, and 1, 2, 3, 4, 5, 6, 7, and a dip, and then we had 2 more weeks, and then so this was actually a more sustained trend. But you can see the point. Maybe probably after 7 weeks of gains, we'll probably at least do something like this, right? A little corrective move around the high before accelerating up. But given the strength of this mood, I would expect something a bit more, maybe a down, up for a couple of weeks, something a bit more choppy and sideways underneath the 90 level. To me, makes sense. 90, top of rising wedge, 7 weeks in a row. I don't like to go counter trend, but I think there's a lot of reasons to think oil probably heads down this week. Also, the bearish divergence on the weekly chart here. This actually indicates a much larger decline. This every peak has gone down as the price has gone up. Momentum has been declining as price has been rising. Obviously, that's negative bearish divergence. And that would actually indicate a much deeper decline, but I think that's, hard to call when it's such a bullish market. But anyway, I think you can take the point. There's quite a few reasons here. 7 weeks up, wedge, 90 level, bearish divergence, quite a few reasons to think oil can pull back from here. Right, moving on to the stock market. Let's have a look at the weekly first. This is really interesting. So this is if we just zoom out the chart slightly, you can see this is our rising trend line, which we've broken down through quite decisively, but we did hold on to the weekly, the 50-week moving average, which has also been it has been supporting the price all the way. You will see that we did break down through the 200-day moving average, but the 50-week has held pretty well. So we've rallied off there, but you can see that actually this was the former record high. Then we touched it as support, rallied up, barely made a new high, and then kind of crashed down through it. Now, having been support that's broken, it's obviously resistance, right? So we tried to break above it, but we then ended up closing down through it for the week. So this candle, not so bearish. I mean, we did close the week positively, but we closed below this key area, which is interesting. Here you can see the evening star pattern out at the top of the area and then just closed down for the last few days. So at the moment, the trend looks up, and it looks like we're just kind of correcting, on a 4-hourly basis, it looks like we're just correcting lower, right? So this looks more like something where you'd buy the breakout through this zone. At the moment, this trend looks kind of still strong, but to the downside. I think what we have to look for is some kind of decisive move lower on the 4-hourly chart. This was the top of the range when we were consolidating before. Could be a move through there, or even if this is our low here. And you can see we've kind of been closing above this low for a while. If we've got a big close down through that, because we've spiked off it a couple of times, indicates that we're probably trying to break to the top side. But actually, if we close lower and back under this 50-period moving average which has been roughly dictating the trend, that could be indicating that actually we're going to come down and test these lows at 4250, etc. So it's not exactly super clear. The overall uptrend, we've broken the rising trend line. We've had a couple of rough weeks, but overall it's a raging bull market. We've just had a bit of a correction. So here is our potential opportunity on the 4-hour chart to buy a break. We've had a correction down to a better price. We rally up, correction. Maybe we can get a break to the top side, but equally, maybe this was just, this was an attempted rally, but it was a false break through the zone, and maybe we're going to drop back down again. So be open to both possibilities. I would say it's obviously we don't know which way it's going to actually go. It's a bullish stock market, but it's obviously correcting and could correct further. All right, let's move to Bitcoin. This is the weekly chart. We've had a decent bounce in Bitcoin. We're back over 42,000. This is the zone I'm watching here. This little zone where we are at the moment is where we had where we kicked off that previous big sell-off week. So we're kind of probing this area. But I think the important one is this, where we kind of held off it for a few times at the 50-week moving average, which had been pretty good support, and we were trying to kind of build a base off, and then we ended up collapsing through it. So I think that's really the big one that I think the price probably can nudge back up towards at this point. It's basically it's the 45,000 handle, right? But it was happening a bit above that. So anywhere between 45,000 is about here, and then up to the top of the range here, it's you could even say up to 46,500. Obviously, it's a big price. There's big price ranges somewhere in that 45,000 to 46,500, even going up to the 50-week. I think that's our resistance that we need to get back above to start feeling good about Bitcoin again. Otherwise, there's some potential opportunities to sell up at better prices for anticipation of a test of the lows and potentially the old record high right back down there at 19,000. Here's the daily chart. We can actually see that this downtrend that's been in place for a while is breaking. So this is a bit of extra reason to think that we can even push up into that zone we were talking about up there. This downtrend seems to be losing steam. We've been in 2 higher highs, 3 higher lows, and now breaking higher. So in the short term, looking a bit more positive now for Bitcoin with this pretty clear trend break to the top side. But after a bit more of a move up, just having a look to see if that old support turns into resistance, and maybe sellers come in again back in that zone. As I mentioned at the start, did want to also just mention the DAX. This is our weekly chart, and this is just our major support level here. 2 things I really wanted to point out without going into too much detail. 14,800 is major support that I think everyone will be looking at. What's also interesting, maybe not so many people are looking at, is that this is our 50-week moving average, and you can see we've not closed below the 50-week moving average since that sell-off last in October of 2020. And we didn't last below it for very long. We zoomed back up it the next week and resumed the uptrend. But here we have closed below it as of last week. So maybe some people are still looking at this area of support to buy above, and this interim support here, which you can see, on the daily chart, we've been in a sideways range, right? And there's the top, and there's the middle, which has kind of worked for selling and buying from the top and selling from the middle again. But people are kind of buying this dip at the moment, but maybe that's a mistake if we've actually shown this evidence from the close below the 50-week moving average. Maybe the trend has actually turned bearish. So if you do think, okay, interesting for bearish opportunities, as usual, maybe we do get a bounce off these lows. Look for a bounce up to some sort of significant levels on the on the lower time frames to try and pick up something interesting. This was obviously a big gap up and then a drop down through there. So something to do with these highs. This chart is pretty volatile, a bit hard to really pick out some particular zones. I think this is probably an occasion where actually you just start picking out the round numbers rather than actual zones. So this peak up here was 15,500 basically, a very round number obviously. So you could say that even 15,400 was the low of that candle too. 15,300 is the next one up from where we are. If we're sitting above 15,200, which is where we're kind of dropping down from now, maybe we can get up to 15,300 or 15,400 obviously would be even better. And that's where that last bit of volatility really came in. So 15,400, maybe that's the one. If we look at from that last sell-off, we got the 61.8 comes at 15,300, and the 50% retracement is So either side of 15,300 is these two level, and the 71. Okay, so the 76.4 retracement is almost precisely on the 15,400. So look out for these areas if you think this sell-off can resume. Maybe it won't even get that high, but if it can, obviously that provides some opportunity to get a better price. All right, I'm going to call it a day there. Thank you very much for tuning in, everyone. I hope that was useful. If it was, again, click that like button and don't forget to subscribe to the channel. Click that bell icon too, and then you'll be notified next time our videos come out. Thank you, everyone. Good luck again. Bye-bye.